I think the Treasurer mentioned a couple of days he's starting to believe that the worst has passed or the peak may have happened. But the Reserve Bank, our eyes are all on that today, Ed. It lifted interest rates 8 times last year. So today's inflation figures will give us a better understanding of how high that cash rate could go when it meets next and further into the year.
The first meeting is on the 7th of February. Economists are currently predicting another 25 basis points, potentially another 25 after that. So remember, the cash rate, this is it. Last year it started at 0.1%. There were 8 rate rises. Some of them were pretty big hits to the economy. It's currently 3.1% in Australia. The expectation from a lot of money markets is the cash rate will peak at 3.6% at some point in the middle of the year. However, today's inflation numbers could influence that. So if inflation is a lot lower than expected, then you can expect the cash rate to potentially peak at about 3.5% or 3.45%. So we'll have to wait and see what the Reserve Bank does.
And so then presumably, Ed, it starts to come down at the end of the year, maybe next year.
Look, the end of the year is what quite a few economists have started telling me over the last couple of days. They're expecting potentially 1 or 2 interest rate cuts in the last couple of months of this year as the economy starts to normalise again and we get back to that sort of normal cash rate of around the 2.5% level.
Yeah.